everybody, and welcome to another edition of Breaking the Mould, our regular market review show with our investment research director, Russ Mould. Russ, it's another week. What's the fuss?
Okay, the fuss this week, it's all about Germany, Brazil and Russia. Now, I know it sounds like some sort of World Cup qualifying group from the football tournament that's going to take place this summer. It's not. I'm actually talking about a pizza delivery company, a logistics expert and a gold miner, and they're all listed in London.
That all sounds very cosmopolitan, but what I want to know is, can investors make dough from pizza?
You're good, aren't you? We'll have you back definitely next time. Okay, the answer is yes. There's a company called Dominos Pizza, quoted in the UK. It's actually giving out a trading statement on Wednesday, the 2nd of April, to accompany its annual general meeting. Now, the stock's been a bit stale over the last 12 months. It's actually down by about a quarter from its high for two reasons. One, very well-respected boss Lance Batchelor has announced he's leaving, taking another post. And two, although the UK and Irish business is going incredibly well, helped by some quite cold winter weather, the German and Swiss rollouts, that's not gone quite so well actually, so they've been encountering some problems there. It's gone a lot slower than expected. So when you look at the trading statement, you're looking for how are things going in Germany, where they're now moving to a franchising system, is the UK still growing at a double-digit rate, and have they found a replacement for Mr. Batchelor? Because let's face it, Domino's has got a huge opportunity this summer. Lots of very hungry football fans sat on couches waiting to be fed late at night watching the footy.
Yes, talking of Brazil, you mentioned it earlier.
That's obviously they're hosting the tournament, kicks off in June. Huge implications for pub groups, betting companies, pizza delivery boys, but also a company called Ocean Wilson's, which not a lot of people may have heard about, because it's a bit of a funny one. It's split in two halves. It's got a 350 million cap, so it's not small, but it's basically an investment company based in Bermuda, and then it owns 58.25% of a company called Wilson Sons that provides port logistics and maritime services in Brazil. And that's the link. Now, as regular viewers will know, the Brazilian stock market, and in fact emerging stock markets in general, have really been in the doghouse for the last 12 months. Brazil's economy slowed down quite a lot. You've got a presidential election there this year, so people will really be looking for Brazil to get back on track, and if it does, Ocean Wilson's is quite a logical beneficiary of that. For the full year numbers, they're always a little bit tricky because of the investment business buying and selling assets, but the market's looking for a £57 million pre-tax profit, a dividend of 26p, that's a yield of just under 2.5%. And those numbers come out 31st of March, Monday.
Okay, so we're looking forward to that. We've done Germany, Brazil.
Yes.
So what about Russia?
Russia. Obviously the news, generally for the wrong reasons at the moment, relating to Ukraine and Crimea. Geopolitical uncertainty, markets never like uncertainty. Talk of the West imposing fresh sanctions. Russian stock markets had an absolute pasting, and that spilled over to Russian stocks that are listed in the UK, like Polymetal, which is a FTSE 250 gold miner. Its shares have been very, very volatile, even though the gold price has been quite strong, nudging back towards $1,400 an ounce, as people have looked for a safe haven amidst all of the uncertainty.
So what can management do to spread a little love
Very good.
from Russia? Love.
It's just poetry, isn't it? Yes, that's very good. There are three things that investors need to know about Polymetal particularly. One, it's very closely tied to the gold price. Gold up, share price up, gold down, share price down. Two, it's got $1.3 billion of debt, which is quite a substantial burden. And three, it uses an ore processing technology called POX, or pressure oxidation. It's good, but it's very expensive. And when it goes bad, it's very, very bad. And they have had some problems in the past. Polymetal missed its 2012 production target, but then beat its 2013 target with a 21% increase to 805,000 ounces of gold. So when it goes right, it can be very powerful. So when you look at the numbers, which are the same day as Ocean Wilson's, 31st of March, you're looking for the new production target for 2014. You're looking for any talk of where they think the gold price is going, not that they've probably got a clue, and also anything on special dividends or regular dividends, because despite that debt pile, they do actually offer a little bit of a yield. But given all the risks, it's high octane stuff, it's not for widows and orphans, but when it goes well, it can go really, really well.
Okay, well, thank you very much,
Pleasure.
Russ. Hopefully you've got your football kit ready and you have got your football kit ready for when the World Cup kicks off in Brazil. This has been Breaking the Mould. We'll be back with you in 2 weeks' time, but until then, take care and goodbye.